Fides Trading Channel, and we are back again with another Fides Flows market brief. It is Monday, the 19th of May 2025, and we've posted our weekly flows video, so go take a look at that, where we discuss what could potentially happen from a higher time frame perspective. But today we're going to break it down from a lower time frame perspective, namely the 4-hour and below, and see what moves we could potentially capitalize on after the opening of the market on this rainy Monday. So without further ado, let's hop into it. We're starting with gold, and we are on the 4-hour chart, and let's take a look at what's happened with gold since the market opened. So we can see that gold opened with the gap up on the 4-hour time frame, followed by a retracement, and then another push up during the 7 o'clock candle all the way to 11. Now, what this just shows is that there's been a consolidation at the opening of the market going up, coming down, and we have full body candles here, both bullish and bearish full bodied Maribozu candles. At the moment, we are seeing an indecision candle at play, but we still have 1.5 hours before this candle close. Now, we see price trading above the 3200 level, and this was mentioned in the weekly flows video as being a massive level of support, because despite price trying to break below this level and close cleanly below it, which it did on the 4-hour chart, price still retraced and closed above this point, and it still holds as a support that is being extremely tested at this moment in time, but a support nonetheless. What we can also observe is that there is a resistance level currently at play here on the 4-hour chart, and it is at about 3250. I'm just going to mark this here. Where is it? Red line it. Yeah, 3250. That resistance level is still holding valid. The reason why I'm keeping this line right here is because it's for the 3200 level, despite the break in and out. Now, structurally, what we can see is that the market is bearish. We have lower highs followed by respective lower lows. We have price sitting within the sweet spot region of the RSI and trading below the 50 SMA. So we could potentially see a break to the downside from this level, but at the moment it is in a consolidative phase. Now, my expectations for this market, if we just go to a lower time frame, and I'm going to delete this one here. If we just come to a lower time frame, my expectations for this market is for further downside potential, despite the consolidative nature that we have here, and we do have a bullish push currently at play. Price is showing downside potential from the higher time frame. Now, the 1 hour, we are very much in the bullish territory. We see price trading above the 50 SMA, and we are trading in the bullish region of the RSI with somewhat bullish structure. We have not created new higher highs, but we do have higher lows which have been created. Now, this level at resistance at 3250 is holding strong at the moment. We can see there is a bit of indecision candles on the 1 hour currently being formed. We have a doji here. We have a bit of a bullish pin bar there, but it closed with a bearish body. We do have a full bodied bearish Maribozu at 3 a.m. this morning. So for the most part, these markets are showing bearish signs, but with the lack of confluence between the 4-hour and the 1 hour, that doesn't really bode well in terms of my confidence for taking those short positions. So I'm just going to wait and see how the market plays out. On the 15-minute, we can see we're trading comfortably above the 50 SMA. We are in the bullish region of the RSI. We do have some bullish structure at play, but not a lot of momentum moves to the upside. So if you are scalping, great, scalp, but be cognizant of the fact that this market has the potential to turn around very, very soon. So my analysis for for gold is that it is going to continue moving bearish. I'm going to be looking for short positions, and I'm not looking to scalp these long positions, as we are at that inflection point where the markets can potentially shift market directionality in the short term. So that's analysis for gold. We can also see that the gold's future price is at 3247, which is actually higher than the current gold future price, which may indicate further bullish long positions. But nonetheless, I stand by the market structure that is currently at play. I do think we have further downside potential before we see a move up. But of course, markets are waiting for sentiment, which comes out of the US and China tariff pause that we currently have in play. It only takes one bout of bad news to come out of that market for gold to either turn around and push bullish or for it to continue bearish. Moving on to US tech, we can observe US tech on the 4-hour chart. It's currently making bullish strides. We are trading comfortably above the 50 SMA, and we are in the sweet spot region of the RSI, which could indicate that the retracement we're currently seeing at play is about to end and the bullish trend will resume shortly. Now we have the bullish support trend line at play here, holding steady. We have higher lows followed by higher highs respectively. And we can go to the 1-hour time frame and just map out this retracement that's currently at play. So per the retracement, the market opened with a gap down. Markets pushed up initially, but the retracement continued into the early hours of the morning and now into the afternoon. The London session seems to have resumed the bearish trajectory of this market at the open. But of course, it's just the markets retracing, collecting liquidity, and investors looking for long positions at discounted zones. My ideal situation would be for price to come potentially to the 2895 level and over there looking for a long position to capitalize on. Now at the moment, price is trading below the 50 SMA. We are in the bearish territory of the RSI per the 1-hour time frame, and I would expect this to continue all the way down to the 20,895 zone, where the break and retest is awaiting a test followed by a push up with the long positions. The 15-minute chart, we are trading comfortably bearish. We are trading below the 50 SMA and we're in the sweet spot region of the RSI. This level's been tested multiple times, and I do expect further downside potential before we see the long positions. If you'd like to scalp, I'll be looking to scalp from this current position at 21,117, which is currently in the sweet spot region, all the way to 20,895. And that should give us pretty decent risk margins. I would say if I put my support above that particular structural level here at 21,200 and trade this to the downside, what is our risk to reward? It's about 1:2.5 approximately. So not bad risk potential there if you are looking for a quick trade, but of course you do have to wait the necessary signals. But I am seeing some weak rejections to the upside here on the 15-minute, which may indeed validate an entry opportunity accordingly. So that is the analysis for Nas100. Moving on to US30. US30 continues to make bullish moves. We do see a retracement here at the open of the market. Markets did push up slightly at the open and of course fell sharply once it hit that resistance level at 42,565. Now, if you're wondering what the significance of this level is, please take a look at the weekly flows videos posted this past weekend, which will break down from a higher time frame perspective why this particular market level is important. Now, per the structural significance of this trend, we can see we are bullish. The bullish support trend line is holding strong. We're trading comfortably above the 50 SMA, and we are tapping in the bullish region of the RSI, hitting that sweet spot and turning around, which is surprising because I do expect further downside potential. But nonetheless, we trade what we can see, and it looks as though the markets are ready for a bullish push to the upside. On the 1-hour time frame, we're trading above the 50 SMA, which is cool to see. Price is broken from the bearish region into the sweet spot region of the RSI, which could indicate trend is ready to continue. And we are seeing the slowing down of bearish momentum and the picking up of bullish momentum, which could indicate the bulls are taking control. But of course, we need to see a significant break of the 42,427 level to confirm that this is at play. So that's the analysis for US tech. I think 15 minutes is very much just going to show bullish nature. Ooh, interesting. We are only just breaking above the 50 SMA now. Okay, something worth noting. We are in the bullish territory of the RSI, but yeah, we do need some stronger signals from the 15 minute to confirm that this is going to be a sustained move to the upside. Please forgive me, a little bit sick after this past weekend. So the VIX index, wow, look at that. So VIX opened with a massive gap up. So it's clear that there is some fear that steps into the market, and the market isn't as risk on as it was last week. We can see this massive gap to the upside at the open. Clearly signifies that markets are a lot less greedy and are stepping back into that little bit of fearful / neutral territory where they are just waiting to see what the markets does. Now, the VIX is still below 20. It's currently sitting at 19.5, which is still risk on territory. So it is clear that investors, despite pulling back on their trades, are still looking for the long positions. And we'll have to wait and see how this plays out in the broader scheme of the market. In terms of news, there isn't much news to report, so it's very much a technical trading day. I will try and get that fundamental video out to you guys. I'm just working on how to create the best fundamental analysis for you that can then also be used consistently, and we can actually use it on a quantifiable basis in line with our technical trading. But with that, I hope everybody has a successful trading week, and I'll catch you in the next video. Cheers, everyone.